Good evening. This is the Elliott Wave Daily Update for the NASDAQ 100 and the S&P 500 for Tuesday, August the 6th, 2024. Today's action didn't necessarily clear up any suggestions or problems or even guesses at what the market is actually doing and what it already may or may not have completed. I'm going to start with the NASDAQ, and I'm really on the hourly chart because everything up to the high at 19,686, I'm pretty satisfied that it's an A and a B, as I've marked it here. So I just kind of want to go in and let's take a look at the inside of this. I'm on an hourly chart, which is what I use. Now, let me just show you that one thing that I'm doing is this is the hourly bar chart. I've gone and I've looked at it also at the candlestick chart. I don't see a whole lot of differences, but here's one difference that I did see when I put it on a line chart, which is actually a closing basis. That's the one that it's like a close. So from here on the NASDAQ, it presents an interesting little picture down here at the bottom. And so it makes it a little bit easier to possibly go 1, 2, 3, 4, 5. So that then could have completed the C wave. Now, this is not indicative of what I've discussed in the past, saying looking for a V bottom and just a shoot up into the sky type of a move. Definitely not. But as I had discussed yesterday, that part of what we're looking at as well is that we have that time fractal, that time Fibonacci time sequences that Sasha brought to me, and we've discussed it before, and continues to work with it. And on that basis, I spoke yesterday, and again, I'm going to speak today to, well, what could elongate the time without necessarily doing a lot of price damage? Because remember, I also discussed that if indeed, all right, so let's just go over our possibilities here. If indeed this is 1 of C, and this is a 2 of C, and we're staring in the face the possibility of a 3 of C, which will go smashing through this level, likely smashing through this level, and really start heading down, which then brings the overall conversation back towards, I'm going to go out to the 4-hour chart, back towards what is this here? Because if this is turning into something bigger other than a minor fourth wave, and we have to make adjustments to the labeling and or even the count, so this will start to make sense. That is also a possibility. Now, I'm not at that point. I'm still fairly satisfied that we are within a minor fourth wave. But again, if indeed this is only wave 1 of C, or if this is 1, 2, and we're in a third coming off, these are the possibilities. Now, the market certainly isn't reacting like the world's going to come to an end anytime soon. So, we saw a lot of activity today where they moved back in. The bond market really started to relax and come off because remember that we saw on yesterday this very strong move back into the bonds because it's a flight to safety. It's a safe place to go put some money and you'll get your interest versus stronger declines that could take away capital, destroy capital. Now, bonds are almost down 2 points, the 30-year. That's a big move going in the opposite direction, but here we are. So that kind of goes with, we saw a strong move in the Dow. We saw another strong move in the NASDAQ, although more volatile. Go racing up, come flying back down. So the overall scenario of how money's flowing, how the options are trading, how the flows within the options are occurring, has still left us in what you'll read about, that it's basically a negative gamma situation. And when you're working in that negative gamma, moves along with volatility fly. Now, there's another thing we saw today. We saw the VIX really start to come off, but then stop and stabilize. And still, the VIX future is closer to 24 than it is to 14. So, but came down a lot from what we saw yesterday. The VIX itself, although now I got to do this so that I can look at it. The VIX itself ended up down 10, almost 11. That's major, considering that I saw it above 50 on Sunday to Monday. So again, are things stabilizing? Not sure. If we turn and have another quick run to the downside, that vol will pop. But what we are seeing is some of the positions now starting to balance out in terms of not just being so directional, not just it's like, oh, well, we're all selling the VIX and we're taking that money and we're buying the underlying or the component company volatility. I think that part's kind of cooled off. And I think there were possibly a lot of people were burned with those positions. But still, we're sitting in an in-between land to me. So undoubtedly, I still believe that we have a fair, strong possibility of additional downside. I mean, as I have discussed before, I can work it out on an hourly chart. We're coming off. I think I could put a 5 down here. Now that could be wave C. And we certainly came into the window, right? The box that I've talked about. There's the box. Not removing that box, it's staying right there, because until I change the overall count, and the labeling, that's the move that I'm looking for to come down into. Now, again, that's 382, right? Here are the fib levels for a fourth wave. Most commons right there, we got there. But that doesn't mean, okay, if it moves beyond that, it's not. It can come down to the 50% and still be, quote unquote, a healthy minor 4. So I got a lot being left open. Now we're back to focusing on, well, how do we kind of work our way out of this? Now, if you're a swing trader, I could see you probably didn't do a whole lot today. Day trading, there was plenty to do. And the moves were fast. They still are fast. And that's the other part about how the markets will trade when we are in what is perceived and considered a negative gamma trading atmosphere. So we see volatility gain and be reduced more quickly. We see the movements in these underlying stocks really get going and go quickly and then reverse. So part of that is that some of the stocks, they start to get a little bit thinner, right? When the market starts to blast out, you're going to be hard pressed to actually find a 20-cent market if it's like a $500 or $600 stock. And suddenly it's moving out like an Apple. I've seen Apple's still $200 stock, but Apple would, between bid and offer, be 50, 75 cents. And yesterday I actually saw $1. And they're trading on it. Now that I say in that manner because as an ex-market maker, if I saw a $1-wide market, I would just put in a bid or put in an offer that might better the market. But today, that's not how it trades. It's algorithmic and it's normally at the market. If you're trading and you're trading the options and you need to hedge a trade with a market that's moving quickly, at the market. So you're seeing that now. When that happens, and for example, in a stock like Apple, and somebody's taking a couple of offers, which pushes the stock up 10, 15, 20 cents, in the index, it's going to move the index $1 or more. And when it's 50 cents or more, like we've seen in Apple, that's going to really kind of pick that up. That volatility in the index starts to push harder. Now, when they're done and it slips right back down, boom, everything kind of comes with it. So we're still in that type of position. And I think the market is still waiting for additional earnings reports, additional word from, hey, Fed, are you going to make a statement about all of this volatility and any possibilities that, you might decide something earlier? That part is falling away. So that's not there. So what do we really kind of go on? We still have this threat of retaliation, all things kept secret. We will do it when they're ready, et cetera, et cetera. So that's still a political and geopolitical hotspot, and that's called the Middle East. So that's what kind of still sits out there that could throw our market. The fact that the United States economy is perceived to beginning to falter, I think a lot of it, quite frankly, is like, come on, we don't need to have a constant pressure of inflation, which is killing the middle class, which is killing people, because it's like, hey, we're the ones that have to go out and buy the food and buy the gas and pay the utilities. And all of those are remaining stubbornly high. So again, what's one side versus the other? So what's the answer to inflation? Deflation, where we actually see prices come down. But then they say that slows the economy. And it's like, okay, so now we got that to battle with. And so where's the happy medium? Where is it where everyone is like, okay with the fact that prices of gasoline, of food, of utilities will come down? Well, if they do, then gee, our grocery store chain won't make as much money. The oil companies won't make as much money. The all of the different things won't make as much money. It's like, so, okay, now we got to factor that in, that they're going to lose a little bit of money. We're talking about companies that make trillions and billions of dollars. So going through this period and then to listen to the chatter talk about that, oh, well, a slowing economy is not a good thing. Then we're going to see that, and that the market's reaction on that basis may have been an overreaction. The market's reaction to a overvalued market, then I look at it and say, no, that's not an overreaction. Don't forget, we stubbornly went higher for a very long time. I'm going to go back out to I'm going to go out to the daily chart. There, that's just October of 2023. We go out again. I just go out to my weekly chart. Here is October of 2022. This market has been pretty much going straight up. There was one correction, but it fit totally within fibs. And then look at that. Then we got another correction, but still straight up. And then this one just literally broke down the doors, busted out, and things got very overvalued. Now, we started to see that as these companies come in, starting to report second quarter earnings. And they're not blowing the doors off, because eventually the market to buy their product, well, we don't need that right now because we still have supply, or we're not looking to buy that because we just bought it last month or last quarter, whatever. So again, what starts to happen? Well, then the market needs to correct and needs to kind of come in. But the intense amount of funds, of money that's being pumped into the market kept it going for a very long time. Now, it all fits in an Elliott wave basis, but again, a wave 4, and again, we're up on a minor degree, that's a period where readjustments happen. We're readjusting things and the prices are going to come down. Just so happens this time they tossed in, the Fed has not cut rates. The Fed keeps promising that they will cut rates. The Fed keeps discussing that, yes, we're on the right track. The Fed keeps saying that, yep, we're okay with inflation's coming down. We're looking for to meet our target. Well, on one hand, I think to myself, why don't you just make your target 3%, get it over with, and bring the rates down? That's just a thought. All right, I'm going to go back to the market right now before I really start to talk longer than I should about what's going on. Back to here. So what I really do think it's turning into, I'm getting a little bit more in favor of that this did complete 5 down, and likely there, and that it was a C wave. So a C wave of minor wave 4. Did it complete minor wave 4? That's the big question. And my response is, I do not think so. Because of a way it is kind of trading here. if we were in a strong reactive move out of the way type rally, you're going to get these and smaller pullbacks, and then these, right? Even in here, this is not very pretty because we still had a lot to deal with, but that's where they gave us the oversold, and bing, 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 got in. Then we had what I don't remember what took place there, but there they repeated it, and then we just started to buy. This is a weekly chart. So we went up for 1, 2, 3, 4, 5 weeks before we corrected 1, 2, 3, 4, 5 weeks down, but nothing too severe. Then we started to go up again. So it's a persistent. Now, could this be forming here? Doesn't look like it on the weekly chart. Let me go back down to that hourly. Could it be? Maybe. But you see how they continued to hit it? This is after hours. So until we can really start pinning, okay, this is what we got to work with. This is what's happening. This is where we should go. And that's not clear yet. Which is why, one reason, folks, I remain a day trader. Although I did buy a couple of stocks today. I'm going to be honest with you. Because for me, they add to a position that I'm carrying forward. And that is just a very much longer term. And yep, it's in AI. That's as far as I'm going to go. But it gets juicy enough, like, sure, I'll add to my position. There's nothing wrong with dollar cost averaging, by the way. So, and again, I believe in AI. I believe that it really is the new sector, but it went too fast and too far too quick. And that's what we're doing now, taking care of that. The world's not going to fall apart. At least I don't believe it will. And I think that the resolutions will come for our situations. But we have all of this, and then we get the narrative going, and then we get what we get. Okay, so here, if I'm going to feel stronger that this is a C wave, then I'm believing that in order to fulfill a time factor, the market would likely move sideways. And we'll have a series of ABCX, ABC. That doesn't mean that it won't continue to move lower, but we may sit in a box and just go up and down as we're putting in either an A, a B, or a C. But if we get to another C wave and we come down and we could break here, well, we know what that story is. It's still an ABC, X, ABC, and it could be another X. So it's the fact of what it is versus how far it could go. I just showed you, we still have the possibility and normal fib levels that would correspond with a minor fourth wave. We've got them all the way down to 16,318. From where we are, that's, well, you do the math, 2,000 points. Big drop, eh? I think so. And then still, rally, rally, rally. So again, how long should we move sideways? Well, we have August expiration. We have September, right? And I think that I heard from Sasha, I got to go back and rack my brain, that there was the possibility that that whole fib time scale could take it out to October. So what do you want to do if indeed we have August, September, October? So basically 3 months more of sitting in a 4. It could. I'm not saying that's what will happen, but I will guarantee you what will happen is the volatility will erode. The premium and options will erode very quickly. If we get into a box and it's got a top and a bottom and it's really holding in that box, premium will go out the window. All right, so moving averages, they're reacting to the market, no biggie, and everything seems to be still pretty much middle of the road. The 200 kind of coming down, that's an hourly. Let me go up to the daily, take a peek at the daily, and we'll go with that route. Here we have still the 200 flat as a pancake right there. Flat, flat, flat. Market not really doing anything, not really going up, not really going down. 200 goes like, okay, I'll take a break. Flat. The 50, not really angling, but is starting. The 20 broke the 50 today. We got a little bit of downside action. the 13, which is this one, is still just kind of moving down. These are the three most important to me. And the 20 and the 50 are important. So again, this shows that it broke here. I think it may have broken somewhere in here or here. So there's still more indicative for downside. But as long as the 200 remains on the bottom, it keeps things in a more confused state in terms of, can we go up? Yeah. In fact, today, look what we did. We came and actually broke slightly above the daily 200, but then gave it back up. So at least we're, algorithms are trying. Now, one other thing that I want to talk about here in the NASDAQ, and I can do that on the hourly chart, this gap. We talked about, there's a whole bunch of people out there that they live on gaps. And the theory is, it's like, okay, you got the gap and we went down, the market will come back and fill the gap. All right, we basically did that today. There it is. There it is. And then started to go down. So I ask, all right, if the whole world knows that you go and you fill a gap, why would I buy anything? Well, I'm a day trader, so I can buy it up to there. Okay, I'll accept that. I'm a position trader. Well, why would you try to position yourself for that? Well, if you're long a call or long something and you get up there, you sell it. Okay. So again, the knowledge that we have is that gaps occur and are normally filled at some point before the market turns and goes back in that same direction. So we gapped down, we came back, we filled that gap, and now we're moving lower again. So on that basis, I'll add one more thing before I move. If this is 5 down, but it's really going to wear out to be only 1, and this is a 2, get out of the way. We'll find out real quick on that count. Again, as well, if that somehow I can count this out and this is a 3 and this is a 4, then we should also still come off fairly quickly, get ourselves back below 17,500 and on down towards these levels are definitively below that low, which is 17,351. So this one is 351. So that would be our clues. In the meantime, we're just sitting inside of a box. And we can do either way. We can, now that we filled the gap, but we can still come back up. And on the basis of, I'll put a C wave there, and we're still looking through the formation of an X wave. And maybe that's already done, right? So we got A, B, sometime a weird position here, like ABCA, ABCB, and now we're up here, and that could be a small C wave. And I can put an X up there. So what we're really working on is the possibility we're going back down in an A wave. Well, you can start to throw some measurements up there. Well, what we'd expect from wave A? Well, if it's going to be a 5 wave, or is it going to be a 3 wave? And then if we get another A wave down, then I'm looking for another B wave up, and then I'm looking for another C wave down. Now, we're just burning time versus price. And that could happen as well. All right, let me go over to the S&P. Pretty much the same, but we didn't get that kind of that double bottom down here. So in this market, I'm going to open it up so we can really look inside. It does appear. Now I'm going to make something. I'm going to do something like I did before. I move it down and put it on the line chart. Check this out. There's the high, but let me put it back on the bar chart. No, there's the high. Why? It was a spike high. They spiked it and brought it back down. Now, if I bring this back and I look at a line chart, which is again the closing basis, it's 3 up. So if I put the C wave there, 1, 2, 3, 4, 5. Is it, right, because that completed the B wave up there. is this a C wave? And does this not look like it's 3 up? So we've got some choices. Here in the S&P, we also have a choice of, was it 1, 2, or are we going to leave this and it's 1, 2, 3, 4, 5? And this is wave 2, and we're going to fall off the cliff? Or is this a third wave? 1, 2, and we're coming down, and this is a 3, and this is a 4, and we're going to come now down and break below that. These are all possibilities. And when you want to look at anything for definitive answers, you tell me where it's going to go. It's like, why would I do that? So that you can hang your hat on why you're losing money or why you're not going to make money or how you're going to make money? No. So here we are back on the bar chart. You can see this is not impulsive. It is corrective. So that keeps alive. We got one more leg down. I'm not really here so much looking at this is forming, that more of a ABC, ABCX, ABC. Now, if I did it from here, then I'm still going to be looking for it to come back down below there and likely down and test that 5,000 area. Now, interestingly enough, there have been some changes here in the SPX and the ES in terms of where put wall and call wall are. Now, this is just kind of coming out because of what happened, I think, over the weekend and yesterday. So I was a little bit surprised. But again, according to Spot Gamma, which I admire and applaud their work, it's brilliant. Now, but the call wall sits at 6,000. Now, that's what I'm expecting the market to go to in a minor fifth wave. But I thought that's interesting. The market traders are the ones that move those things around by changing their position and adjusting and moving it. Now, same time, there is and remains a very strong line in the sand down here at 5,000 in the S&P, which is considered not so much a put wall anymore. The put wall moved back up. Put wall, I believe, is back up. I'd have to go back and check exactly where, but what is here is large positions and like to provide support, and it's long-term support. It's been there for a while. So it's the same type of a deal. If it breaks, if they slice through it, and there's reason behind it, so in other words, something bad happens that truly has a much more strong effect on economies, on a lot of different things, disruptions, many different things, we could see that it'll just go right down and go through it. Because I think at the same time, those with the positions there, the threat could be you're going to get taken out. They go in front of you and change the position. And, a lot of things can happen. But I want to make it clear that that's what the support line is basically telling us. It's not necessarily changing. There's a large amount of gamma sitting there. And therefore, if it breaks, it tosses the S&P and the market into a stronger negative gamma. And if that happens, and you are sitting with this stuff and they are taking the market down, you're getting longer as it's happening. Your position, it's almost as if you were like long stock and it's dropping way below your price, dollar for dollar, delta, dollar for dollar, you are going to lose money on that position. Same thing, if you're having short gamma, you're long if it goes through it. You're picking up not like it's improving and your position is going to make a ton of money. It's going to lose a ton of money, and they will act quickly on a serious break. So we got that still out there. But in my opinion right now, I'm thinking, well, no, I think they go down and test it, but I believe it holds. Now that I don't read the crystal ball. I'm not out there thinking like, well, Iran's going to go over there and it's really going to cause a fuss, and Israel's going to have a lot of damage. Or they're going to lob something at Israel. The United States is going to have to step up, and guess who steps up behind Iran? Now we have a possibility of a world war. Uh-oh, that's disruptive. So again, they're still out there. We don't know. In the meantime, I'm thinking, okay, this could be 1, 2, 3. This could be a 4, and we come down. We go below that low, finish it, ABC down, right? So that would be, I could count 1, 2, 3, 4. Now, this one did not fill the gap. That's the little gap. That's the Sunday gap. Didn't fill it. Didn't even get, kind of got closer than it was before, but it didn't fill it. Now, we're heading lower. In fact, we're not actually closing on the lows. The low was 52.38, and we're closing at 49, so it's kind of healthy. What? Who knows? We continue to have support at 51.32-ish, but our next strong support, and I mean strong support, comes in at 5,000. So again, if this is a 4, I'll try to work out where the 1 is and then put some fibs that'll go down through here and give us an idea of where the market, if indeed it's coming off in a 5th wave to finish a C wave, what are the potential, what's the possibilities? Right now, I would use something such as this. And again, guys, this is just a guesstimate. Please don't leave me comments about this. And I'm going to, there, and then I'm going to come over if this is the 4. Well, you can see 1.618. We're down below there, so that's good. 5,089. Logical. But then we have that 2,000. And then we have a 2.618 if wave 5 really gets nasty, if indeed it's a wave 5. Well, then you got 49.33. That's breaking the put wall. That's breaking that gamma level, let me say. I think the actual put wall got moved down even more. So I'm monitoring the possibilities, and I'm monitoring the development of different angles that the market looks at. I don't believe that this downturn in the bonds is doing the market any favors. Right? That tells me rates went up today. The yield, aka rate, and the 30-year bond went up. The bond price went down. And that kind of, we started to see that yesterday in the 2-year, but then I thought, okay, they're dealing with the curve. The yield curve, an inverted yield curve starting to correct itself, where the long end of the curve will start to kind of come down a little bit, where the short end of the curve hangs on to those little bit higher rates because of the short-term nature. Not happening, but that's the theory. All right, so back here, what our possibilities are is that if it was a wave 4, we got a 5, and that then completes the C, I think. But we're still dealing with that same time factor. Same in the NASDAQ as it is in the S&P. So if this indeed was, I can count down 5, and I put a C wave there, then this is going to be A, B, C, X, A, B, C, maybe. See, again, we're getting a little bit sloppy even out in here. How do I want to count that? This could be A, B, C, A, B, 5 ways up C, and then I stick an X up there. Not a whole lot of room to put in another series of ABC, because I would be expecting that we still come down and challenge that 5,000 level. Either way, I think that the market will come down and challenge this. Not necessarily break it, but challenge it. In fact, it might try to spike below and come right back up. All to be seen. Moving averages. Let's go out to the daily and take a look at those moving averages to see what they look like today. Bingo. We have the 20 getting ready to give a kiss to the 50 on the daily. A break below might change that to a red, and we start to come down. The 200 has gone flat, like in the NASDAQ. Why? We're not really going down anymore. We're not really blasting up. Although that's a nice little bar, but look where it is, open and closed at the same place. So what was that, all that upside? Fluff. Okay, so we'll see. We will see, but the moving averages, 20 now, still angling lower. 50 still angling lower. 13 definitely heading lower. And the 200 going like, I'm going to go to sleep. Snoozing, it's flat. Now tomorrow, let's take a peek at what we might have in terms of economic data. On Wednesday, consumer credit at 3 p.m. Eastern. Okay, and that's about it. And for June, I'm not sure if they're telling me that it's going to be $9.7 billion higher, or whether it's actually coming down from previous, which would not be a bad thing if people were like getting out of debt. And that's going to be it. So the next update will be on Wednesday, August the 7th.